biggest lie anybody has ever told me was investing is for rich people, and that you have to be about 50 or 60 to actually start investing. Okay, it's the biggest lie ever, right? Investing is actually for the younger generation. The younger you are, the better, right? When I was 18, I was often told this, that you need to wait until you're 50 and to start investing, or you need to have like a ton of money to start investing. But this isn't the case. Okay, investing is best when you're younger because you have a longer time horizon to endure the different crashes and stuff that inevitably happen within the stock market. Okay, on today's video we're going to be talking about investing, who it's for, and just generally my take and my journey on investing in different asset classes, such as stocks, shares, different ETFs and index funds as well, all based on a long-term time horizon. Now, to put it in perspective and practical terms, if hypothetically you was to have an initial investment of $1,000, right, and you invested $100 per month with a duration of 5 years, okay, and annually your rate of return was 9% for the average of the stock market at the moment. Okay, if we was just to calculate that on a yearly basis, right, you would generate over $8,700 in returns. Okay, and this is simply investing into a low cost average index fund. Okay. Now, if you was to invest into the S&P 500 index fund 5 years ago, you would have made over 83% on your return. Okay, this is all approaching it from a long-term time horizon and assuming that as well you're investing consistently monthly to take advantage of those returns. Now, oftentimes the most challenging thing about investing is consistently investing your money even when the market is down. Okay, it's fear and it's greed, it's constant push and pull. Now, it's why you have to have the right mentality going into investing, and going into investing with a plan. Okay, because if you don't have a plan, then ultimately when the market does crash and correct itself, then you'll be left confused and wanting to withdraw all your money and your hard work that you've done to actually start off your investing journey. Okay, so it is important to go into the market with a plan. Now, when you go to look to find a provider for ETFs or individual stocks and shares, there are so many different providers out there, such as Vanguard UK, Freetrade. But for today's video, we're going to be diving into Trading 212, as personally that's my favorite platform to actually use, specifically because with Trading 212 it's commission free. Okay, which basically means when you're taking any investments or any trades or anything like that, you don't actually have to pay any commission, which is great. And also they just added this new feature where you actually get 5.2% interest on uninvested cash. Okay, which it's a no-brainer to me personally. So if you do want to check out Trading 212, I've put a link in the description below as well. Signing up through that link, you'll actually get a free share, which would be great for you to kick off your journey as well. Now, before you invest in a specific stock or an ETF, you want to have a look at the financial metrics of that specific company. So this could include the income statement, the balance sheet, the cash flow statement, as well as what the company actually does and how it actually makes its money. So this is very important. There's loads of different ways to look at this information. We can have a look at different websites such as Yahoo Finance, or what I like to do as well, having a look at the company's investor relations section on their website. But a great starting point is just to have a look at Trading 212 section of the financials, as well as an overview of what the company does. Okay, so if we was to have a look at a company such as Microsoft, you can see how well the company has done over a year, and it's done very, very well so far. If we was to scroll down a little bit, we can see general company details of what the company actually does, different services it provides, and how it actually makes this money. Right now, looking at different information such as who the CEO is, number of employees, sector and industry is obviously a great starting point to do your analysis and having a look at the management of the company. Right, Looking at key ratios as well, market cap, Microsoft's actually the most valuable company at the moment by market cap, just overtaking Apple. We can have a look at PE ratios, revenues, all important information to obviously have a look at before you invest for the long term, right? Now, scrolling down a bit further, this is where we get in really to the juicy bits of how the company is operating. So we can have a look at the income statement, the balance sheet, as well as the cash flow statement, and it just gives you a great overview of what the company's financial health is, right? Now, like I said, there's obviously other ways to do this. There's looking at Yahoo Finance, investor relations pages as well, but we can get onto those in a separate video. But for now, if you was just to keep things super simple, you can have a look at this information on Trading 212, and it's great. It's a fantastic way to especially get started, as the platform is super user friendly. Now, going into the market and investing for the long term, it's important to have a plan and also a diversified approach, right? Because if you're looking at it from a long term time horizon, the market will go up and down, every single day. So it's important to have a plan before you actually get involved in investing. That's certainly what I've done, just to invest for the long term, right? Because like I said, the market will fluctuate every single day, and you want to have a plan and a really strategic method of investing. So I like to invest and dollar cost average and invest every single month, which we'll get into on another topic. But I think it's the great way to invest and diversify, especially when you're younger, because you can withdraw the crashes that the market will inevitably have, right? Because you're having a long-term time horizon, and you can also take advantage of compound interest. Now, this approach is used by famous investors such as Warren Buffett. He often recommends investing into a low-cost average index fund, as well as investing for the long term. And he's probably one of the most successful investors of all time, and he stuck to investing regularly, investing into great companies as well. So that is the approach that generally I want to be taking, looking at the long term, investing consistently and investing into great companies. That is it for the video, guys. If you did find it valuable of any sort, drop me a like and feel free to subscribe. I've also linked Trading 212 in the description down below, so feel free to check it out for yourself, and you'll obviously get that free share as well.